Welcome. Today what we are going to look at is we are going to see what happens when a stock drops and why investors are always advised to take small losses whenever a stock is not doing well, whenever a stock is going against your expectation. I'm going to show you a mathematical reason as to why you should always take small losses. There is a reason why you only want to take small losses when you're losing money on any stock. And what I'm gonna show you is a table that is gonna show you how much a stock needs to rally after you've lost a certain percentage of points. Okay, so I'm gonna start you off. First and foremost, I'm gonna start off right there, and what that says is that a stock that is down 1% needs to rally 1.01% in order to recover losses. So that is straightforward. Now look down and see what happens at 2%. You get that, and at 3% is still 3.09. So at 3% you're still doing fine. Your stock only needs to rally 3.09 for you to be back in the in positive. So that's not a big deal. But notice what happens as we start going lower. Around 5%, the stock needs to rally 2.26% for you to get your invested dollars. And then when I start noticing what happens as we go down, for example, at 8%, it's 8.70. It's getting harder and harder for you to get back the money. You're only down 8%, but for you to go back in the black, you need 8.70 right here. So what you start seeing is that the more you let a stock drop, the harder it's gonna be mathematically and in reality, in real life, for the stock to give back your losses and for you to be back in the black. Now notice what happens at right there at 10%. At 10% down, you need to rally 11.11%. And what that means is that now it's getting even harder. Not only are you in the 10-digit area, you're already going to the 1% higher. So that's why you'll notice that most stock picking services will recommend you to take losses around there, just around there, because it makes a lot of sense. I mean, you're still within your where you bought the stock, so when you take a small loss, some people might not like taking small losses, but there's a mathematical reason for that. The point of it is that the longer the stock drops, the lower it drops, mathematically it's going to be harder for you to get back your invested dollars. So I'm going to scroll down so we can see what happens at 11%, 12, and on and on. So I'm just going to scroll down just for the sake of demonstrating what happens when a stock is not doing well for you. You see at 25%, I'm going to put it right there. Notice what happens at 25%, right around there. You see what happens? The stock needs to rally 33.33% for you to be back in the black. So it's getting harder and harder, just as the trend is showing us here. So I'm gonna keep scrolling so we can have everything, all the tables, so you can see what's happening. So just keep scrolling, and right there you see that when we are down right there at 50%, you need to rally 100% for you to be back in the black. So folks, it's very important that you take small losses. I'm gonna scroll back to the next page. So when you are down 51%, what this shows us is that at 51% we need to rally 104% just to get back our lost in investment dollars. So that, you know, as we are seeing, it's harder and harder. And for me, what this just tells us is that even in life, whenever you find yourself entrenched in in things that are not productive, what happens is that you find yourself having to work harder to get yourself out of some situations. For example, anybody who has a problem with alcohol or any kind of a drug problem will tell you that had they stopped, when they had their first inklings that they were going down the wrong path, it would have been easier for them to quit. But now that they're entrenched in the habit, it's harder and harder for them to get out. Or a smoker will also tell you that it's harder to stop smoking once you've been doing it for a long time. So this mathematically is a reflection of why we should be taking small losses in the market. I hope this has been at some level helpful to you. To keep reminding yourself that you need to take small losses whenever you're in a stock and it's going against your expectation. Thank you very much. Thanks for stopping by. Once again, this is Eric Mwathe with Mwathe.com, wishing you all the best. Peace and blessings to you.